Good morning, everybody. Welcome to the Ankerstar Wealth Market Update. We are going to talk about three topics today. First of all, Amazon. Mike's going to run us through that. Very similar to what he did with Apple yesterday, is not just break down where it is, but kind of look back about the goods and bads of Amazon, a little bit of history there. Then we're going to switch gears into the healthcare space. We don't have a whole lot of exposure to the healthcare space, and certainly not in specific stocks, but we used to with Eli Lilly. Some of you still have it, but mostly we switched that a little bit. We're going to talk about Lilly and then how we currently have exposure to healthcare. And then we're going to close with a very contentious topic. I just can't ignore it anymore. And that's Bitcoin. It's up, 18% in 3 days and another 5% today. It's quickly become, this morning it actually became the number 2 holding. It lapped Amazon early this morning. It's kind of drawn back, so it probably won't lap it again until this afternoon. But for the number 2 holding in the book, so I kind of owe you what I think about it as a small version, and I should probably do an entire presentation on what I really think about it later on. But it's craziness in the crypto world, right? So I'm going to peel that back for you as quickly as I can. Before we get started, though, this is a financial education presentation, so you have to do your own due diligence before you act upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. Mike, over to you. Let's talk about Amazon.
All right. So Amazon, if you don't have an Amazon account, I'll be surprised that you're actually watching this webcast or you're even using your computer, because it seems like everybody has an Amazon account. I will be the first person to admit, confess, and my wife will confirm, same with my kids, I do not like to shop. I am not a shopper. I'm not a go out to the mall. I don't even really like to go out to, the Walmarts and Kroger's. I just don't like to shop. But I do like to shop on Amazon. So that is the one exception. Anything that I can buy on Amazon and have delivered to my door, that is my preference. So I just wanted to start off with just a little bit of history on Amazon. It is, as Steve said, either our number 3, number 2 holding. It's bouncing back and forth, but it is a major holding in a fantastic company. What has been done there since, and you have Wikipedia up on your screen, since 1994, when it first was founded by Jeff Bezos, is absolutely incredible. And I won't go through this whole Wikipedia article, but in here it does say that it is even the 12th most visited website even now. So, those of you that start off with Google or wherever, Amazon, you're out there shopping. So one of the things I thought would be interesting, and I looked at this a few years ago, I had to pull it up this morning, is what was my first purchase on Amazon? What did I buy and when? And full disclosure, I'll bring it over. I don't think there's anything too shocking in here, but well, maybe a little bit. So the first purchase I ever made on Amazon that is still tracked to this day, every purchase I've ever made is tracked here, is a dictionary of card games, November 13th, 1998. So only a few years after it opened. And then I must have really liked it, because 2 weeks later I bought Teach Yourself Microsoft Front Page, How to Create Web Pages, and listen to this, The New Joy of Cooking. We talk about books. You buy books, sometimes you don't read them all. I'm not sure I've read The New Joy of Cooking. At least it never took. But I do have it here. And then you can see if you look right at the top of my screen, I went into a little bit of a golf excursion. So those were my first books. Steve, how about you? What were your first books?
We cheated, right? Mike had me look this up ahead of time, but looking back to 2014, I bought 2 books. One of them was an investing book, David Einhorn, who I'd just seen at the World Series of Poker, physically, saw him. I was like, okay, I should go buy his book. And I went back the next day. He was already gone. I was going to have him sign it. When I got the book, I was there for the week. But the next one was Pragmatic Capitalism, which is what every investor needs about money. And it's funny because we're going to talk about Bitcoin later. And in this, Dr. Cullen Roche, who I followed a lot earlier on, was the first one to say money is a social construct and really kind of challenge a what is money kind of thesis. So anyhow, those are my first 2 purchases from this account. Mike's like, oh, bull crap, right? Yeah, I know you purchased something before 98. And, I thought of this earlier. It's probably my Ankerstar at Hotmail account. If you remember Hotmail account. So I transitioned off that. So all that history is probably either gone or out there somewhere. But yeah, those are my first 2 purchases that I can know about.
Awesome. And I would challenge anybody that's watching this, if you want to reply in the link, go back, look on your Amazon first purchase, put it out there. Put out your first purchases. It'll be interesting. So Amazon started off in books, pure books. That's all they sold back then, or resold. And the question is, like, why? Like a bookstore, like how good is that? How useful is it? Back then you had Barnes and Noble, you had lots of different bookstores, and obviously there's not very many bookstores anymore. In fact, I kind of sometimes like to see those just to put your hands on a book. But the value I find in Amazon is you can read other people's reviews of books. We don't have that much time to read nowadays, it feels like. So I don't want to waste my time reading. So I am be the first to say I look at reviews real quick. Like, do people like this book? Do they find it useful? Do they like this product? Do they find it useful? And then I make decisions based on that. So I thought, it's interesting to think about reading books. And, I found this chart, Americans reading fewer books on average. And this graph is since 1990. So if you think of it, Amazon started on this nice little uptrend of books that kind of peaked in 1999, right before the dot-com bust, at 18.5 books per year that people would read. And the trend after that does not look so good. But yet Amazon has done fantastic. So obviously, and we all know, they did not just stay in books. And I do want to show their chart. If they were tied to books only, and you looked at a chart of Amazon since their creation, it would not look like this. So you can see that this chart has grown and grown and grown, while the number of books read is declined, sadly. So what is Amazon getting into next? And this is very interesting to me because I've been in the healthcare field. So Amazon is getting into, article comes from NPR. It's been out for a couple months, and you can find other things if you Google Amazon and healthcare. But they're, after they've conquered all other shopping, toys and videos and all this, this is where they're going next, or at least they're attempting to get into it. What they do is they have a product where you can, I can't remember the name of it, but it's $9 a month, and you can actually access a virtual physician. And it's interesting because everything they do is online. And when you get to your doctor relationship, how much can you do online? So I'm very interested to see where Amazon goes with this. I've worked for health insurers, and Amazon is a great aggregator, provides reviews, understands products. Can they really get into healthcare? And that's the thesis, is they're getting into it. We still hold it. I don't know how well this will go. Will this go the way of Apple in the iCar, where they try it for a while and then they get out because there's too much competition? Or can Amazon turn this market on its head? So that's what I want to leave us with, is that, Amazon, great company, done great things. Go ahead, put your first book out there on the reply. We'd love to see it. And that's all I've got. Turn it over back to you, Steve.
Yeah, that's great stuff. And one thing when I think of Amazon is being, been an investor for 10 plus years now, is when they did the Amazon Go, kind of the touchless physical stores. They were all online, and they had these stores where you'd walk in and just walk out with the stuff, or, do some form of checkout. And now that's kind of everywhere, right? I was at the Bass Theater here in Austin, and everything was, you put your stuff on a tray and check out, and there's really just somebody sitting there watching it to make sure you don't just walk past that, right? So kind of breaching new territory. It's what they've been doing since day one. So always trying new things. Love it as far as an investment. All right, over to what we're going to talk about next. We did talk healthcare earlier. Let's talk about Eli Lilly. Again, the original attractiveness for Eli Lilly, here we go. That one is the it was Alzheimer's, if I'm saying that correctly. Again, huge upside for the first company to kind of crack either mitigating or curing. Curing, okay, maybe that's a bridge too far, but mitigating, strengthening the brain going into aging. All of the whole space is just ripe for new drugs and new discoveries. And they, there's been bumps in the stock because they were kind of one of the ones talking about, testing and stuff, and it didn't kind of work out for them. But what did work out is Ozempic and all the weight loss drugs, the GLPs, if I have that correct. And that's what has this big run up in the stock. When you look over, this is a 1 year chart, you go back to like 5 years, and you can see these are, Amazon type numbers, right? Down here below 100, and now it's at 700. So it's really moved up. We don't have exposure to it because I think you could make an argument now that, this can't go up forever, and it's kind of tough, PE wise to compete against tech when you're not a tech firm. So I don't know that it's not topped out or not, but Mike, how do we have exposure to Eli Lilly and healthcare through our models?
Yes. Picking an actual, what drugs are going to be successful, which ones are going to get through clinical trials is difficult. And we obviously have no insider information to know which will pass through. So we use an ETF, we use VHT, Vanguard Healthcare, and Eli Lilly is the second biggest holding within that. So that's about 8.6% of that holding. So that is an exposure to it, a bit muted. But then you also have exposure to Johnson & Johnson, Merck, AbbVie, United Health Group. So you're getting exposure to other major companies. We don't know which ones are going to have the hits or misses. If you told me that Eli Lilly at 300 billion market cap could double in a year, I'm shocked.
Right.
But it has. So,
yeah.
So, typically companies that are 10 and 20 and even $50 billion market cap can double quickly, but a big drug company, and it did. It did fantastic company. I know people that work for the company and they love it. So it's a great company, but that's how we have exposure rather than trying to pick individual drug companies.
Yeah. And I think you bet. No, that's a good point. Sometimes we can pick best of breed out of a space, and sometimes you can't. Healthcare, it's like we tried to pick best of breed. Now we're into just buy the whole space, right? Cyber, the other way, we had big exposure through only the ETF, and now out in Sentinel-1, as well as CrowdStrike and some of the other names that are out there. So you kind of, there's obviously more risk when you go with the individual name, and it's great when you are right. But if you don't have the expertise, then just buy the ETF and let folks that are looking specifically at this theme do their thing. So they're the ones that are going to decide whether Eli Lilly is overvalued or not. All right, moving on into Bitcoin. Lots of opinions out there, but one thing you can't deny is that it's going straight up right now, especially in the past 4 months. So yes, it's crypto. Yes, it's make believe. When people say, how can you invest in something like that? And I'm like, well, where'd the dollar come from? It didn't exactly rain down from the sky or pop out of the earth either. We made that up too, as well as all the other currencies of the world. So won't go too far down that road, but it is it is widely accepted now as a currency. And of course, it just got into the ETFs on January 10th, which is the big deal. So I'm just going to tell you a little bit of a story, and then I will tell you why we're in it and why we're planning on holding it. So I went to a conference last year. It was a digital asset conference. Rick Edelman was there. Josh Brown was there, and both were on stage, and they were having this debate. And I'm sitting there with an investor, one of my accredited investors, and then two of our younger folks, Jaden and Allison. And Josh Brown and Rick Edelman are like, I have no idea why every single person wouldn't want exposure to this. And they're the ones on CNBC. They aren't saying that a lot on CNBC because, it can be problematic, but they're at a digital asset conference and they're just like, this thing is primed to move. I thought about that. Rick had a book out, Bitcoin book out of Bitcoin and money and all that. So I read his book, which I don't normally do. Normally I get the books and have people sign them and they sit on the shelf to look good, right? Mike talked about that, but I actually read that one to learn more. And I still don't think, there's a lot to grasp in the space. But they were saying you need to be in on this because the Bitcoin halving's coming up in April of 2024. The spot ETFs are going to get approved. They had an SEC, crypto guy there, like the head of crypto there, talking, and he couldn't override what anything Gary Gensler's saying, but he was kind of given the Bitcoin is going to make it through. Prognosis into the ETF. So we started the story with MicroStrategy. If you've ever heard of that or noticed what this MSTR was in your portfolio, these are all 1 year charts. We started, I go to the conference in June. I have to have my, Steve processing time of thinking about it for months, or maybe that's how long it took me to finish the book. Anyway, don't judge. But we moved in November. And it was just I finally hit the I believe button enough to start work, going into MicroStrategy, which is led by Michael Saylor, who's a Bitcoin maximalist. and he put a bunch of Bitcoin on MicroStrategy. You know, MicroStrategy is a software company. You can read off to the right, but it's largely a Bitcoin proxy, right? You just start buying Bitcoin, and when Bitcoin goes up, obviously their balance sheet blows up. It has made a heck of a move, as you can see. As we went into December timeframe, I switched horses out of MicroStrategy. My theory was that as soon as the ETF came out, people would bail on MicroStrategy. That's not true. Look it up here. Okay. But we did switch into the Grayscale Bitcoin ETF, which was the only trust ETF. It was a trust at the time that you could hold Bitcoin before the ETFs came out. We were in that for a while. So if you saw a taxable transaction of sizable amount, that's that MicroStrategy sale to go into GBTC. And then we did it again on January 10th when the ETFs were approved. There were 11 of them. I went immediately with the Bitwise folks for two reasons. Primarily, they're cheapest. They're waiving their fee for 6 months, and then it's 20 basis points, so 0.2%, so very cheap, cheapest out there. And I've also met with some of these folks at the crypto conference, and they've been in all different versions of BITO and some other exposures, BITW. So they've been in the space for a long time, right? Bitwise, it's their company. So that's where we are now. Most of you got in on the 10th, and I've been buying all the way through this. Here we are today, new highs, 34, 30, 34, 43. So the question becomes, is this something that we want to hold, or are we just taking the ride? Well, we're holding, unless you get uncomfortable, because it is quickly becoming people's largest position in their portfolio, because it's really doubled since the MicroStrategy days. It's more than doubled now, actually, from the amount that rode through that transition. Anything that has a finite amount, which Bitcoin does, they're making 900 Bitcoins a day through the mining process. The ETFs have 10,000 coins a day of inflow. So whenever you have a huge demand problem, a huge supply problem and over demand, the price is going to skyrocket. And that's where we are right now. So that's going up. The Bitcoin halving is coming up. So then there's only 450 new Bitcoins a day. Increases the problem. So it doesn't matter what the underlying asset is. If there's not very many out there and whales are buying them up, there's one individual account that bought 1.3 billion this weekend in Bitcoin in one single transaction. So, I mean, people are hitting the I believe button on this, but whether it's AMC or tulips or, whatever the underlying asset is, when you have this kind of craze going on, it starts up, and then the FOMO hits as everybody hears about it, and that only takes it off anymore. So we're holding for now. Unless you're uncomfortable, reach out to me if I'm your advisor. Otherwise, reach out to your advisor. And if you want to start peeling some back, you can. We have exposure to this in accounts that are 65 risk and above that are in the models. So, that's where you have it. And of course, 13% is our largest exposure. But if you win on, in day one, you could be up towards 25% in your portfolio. So obviously we're watching this thing like a hawk, since it's been rifling through our top 10 chart. And, Apple's the only one left for it to overthrow. A couple things to bring up. 2 countries actually use this as their currency, their legal tender. They threw away their own and replaced it with Bitcoin. They transact in it. You transact in Satoshis, if you've ever heard of that. Stack and Sats is the cool lingo. But Central African Republic and El Salvador, yes, they're small countries, but guess what has brought them, they've doubled in their currency, right? So it's kind of lifting them out. Their currency is helping lift them out of the challenged situation they are in, if you will. This is coinmarketcap.com. Don't endorse this at all, but it's interesting. But anyhow, predictions for who's next. The United States was on here. We'll see. I don't know. Don't know the end of that story. But I think there's enough challenges with currencies in the world that Bitcoin has the potential to become a worldwide kind of currency, thinking way, way down the future, right? And the last thing I'll leave you with is Fidelity. So first of all, Vanguard came out and said that you can't own these Bitcoin ETFs, are too dangerous. Lost a ton of business. Because people are like, okay, hello, boomer. We're out. We're moving our hundreds of thousands that you guys guess you don't care about per account out to somebody that will let us own something that's on a free open market. So thanks, Nanny State for protecting me from myself. So Vanguard is still like, nope. Fidelity, in a shocking move, advised literally that a 1 to 3% allocation could be appropriate for your portfolio. If you run the math, if Fidelity wide, and this is not talking Schwab, we're not talking any of the other big houses out there, if Fidelity alone actually put a 3% allocation in, if people followed their advice and said, 3% sounds good. If everybody did that, the price of Bitcoin would be $750,000. Insane, right? So, I mean, it's just, there's so much to process here, but right now we're holding. Mike, did you have a thought there to add?
Well, I was just going to say the limited supply, I mean, as far as now, the demand is going through the roof. So anybody who's studied economics, that supply demand graph, they can't supply more of it because there's only so much that'll eventually be created, like 21 million. And like Steve said, 450 a day. So it's incredible. It really is. I'll confess, I was on Amazon yesterday. I did not purchase it yet, but I was going to buy myself a Bitcoin T-shirt so I could wear it to the gym. so I was trying to figure out which one to buy. I was looking at them, so go buy all those too. So, anyways,
yeah, we did do this. It's still not near its all-time high. If you go under the crypto chart for Bitcoin, it's closing in on. Yep, CNBC Live is talking about it now. If you go to the 5-year chart, you can see we're right at pretty much the all-time highs. I think the intraday was, what do we have here? High of 67. It touched, slapped a high 5, closed at, well, that was a day later, right? 64,000. So we're in the neighborhood of the all-time highs. And that's where you saw, Bitcoin millionaires, and most of them are, 20-some-year-olds. But hey, if you've got the foresight and got in on this thing early, it's back. So if you're worried about having too much, let us know. If you're worried about not having enough exposure, let us know. So it's a good conversation to have. But again, it's high risk, right? It's high risk. We got that. We own that. And yeah, we'll be happy to talk to you about it. But that's all I've got for today. Thank you so much. Since we talked about specific stuff, just as a reminder, financial education here in this presentation, do your own due diligence before investing in anything you hear in this show. And with that, go ahead and let you go, and we'll talk to you guys tomorrow. Have a good one.